Hello. Good morning, candidates. Some important news regarding the stock market, money market, and also Silicon Valley Bank for the sake of interview. First news is that retail inflation slows to 6.4% in February. It is still above tolerance limit of 6%. That is one news. Second news, Sensex plummets over 2,100 points in 3 days. Sensex plummets 2,100 points in 3 days. What are the key factors? The Indian stock market has crashed after the failure of Silicon Valley Bank and Signature Bank in the United States. This has caused global equity markets to fall and has caused fears of contagion in the Indian banking system. Just when the Indian stock market was trying to recover from the Adani crisis, the failure of Silicon Valley Bank, I think one more bank they are telling, and Signature Bank in the US came in as another crude shock. In the last three trading sessions, investors have turned poorer by rupees 7.3 lakh crore and Sensex has crashed 2,110 points at the Silicon Valley Bank crisis. Is having a ripple effect, a ripple effect on global equity markets. During the day, the bank stocks were among those worst affected, despite analysts and brokerages saying that Indian banks are well placed in a tight regulatory framework. While the Sensex ended 897 points lower at 58,238, Nifty ended just above 17,150 mark. Here are the key factors troubling the investors in stock market. One, Silicon Valley Bank crisis. Two, global markets. Three, sell off in bank stocks. Then Fed fear. Although chances of 50 basis points rate hike decreased in the wake of the SVB crisis, investors are eyeing the February consumer price index and the producer price index for February. If they come in hotter than expected, they simply expect bigger bet of they expect Federal Reserve to raise by 50 basis points. Then technical factors. On the weekly charts, Nifty has been consolidating for the past many weeks, and prices are gradually shifting their base lower, indicating a bearish to sideways momentum. So these are the reasons on account of which. So the five reasons: number one, Silicon Valley Bank crisis; number two, global market; number three, sell off in bank stocks; number four, Fed fear; number five, technical factors. That's right. Then mm, next point, former, next point, FDIC names former Fannie Mae chief Tim Moyopoulos as CEO of Silicon Valley Bank. The Federal Deposit Corporation on Monday named Fannie Mae head Tim Moyopoulos as the chief executive officer of Silicon Valley Bank, a subsidiary of the defunct SVB Financial Group. He steps in after regulators shuttered the startup-focused lender on Friday after run on its deposits. This point is important. Another one I read, this one, FDIC transfers all Silicon Valley Bank deposits to a new branch, new bank, Bridge Bank. I think they are trying to take care of the interest of depositors. To protect all depositors of Silicon Valley Bank, The US Federal Deposit today transferred all deposits, it's a very good move, both insured and uninsured, and a substantial part of all assets are the now shut to a newly created bridge bank, which will be operated by the US agency. The FDIC also named Tim Moyopoulos as CEO of Silicon Valley Bank, NA, the bridge bank. The Moyopoulos is former president and CEO of Federal National Mortgage Association. A bridge bank assumes the deposits and certain other liabilities and purchases certain others of a failed bank. The bridge bank structure is designed to bridge the gap between failure of a bank and the time when regulators stabilize the institution and implement an orderly resolution. FDIC said depositors will have, it's a very good move, will have full access to their money beginning today, that is Monday, that is 13th of March, when Silicon Valley Bank, the bridge bank, opens and resumes normal banking hours activities, including online banking. Depositors and borrowers will automatically become customers of Silicon Valley Bank NA and will have customer service and access to their funds by ATM, debit cards, and writing checks in the manner as before, the agency said. Silicon Valley Bank's official checks will continue to clear. It is a very good move, and loan customers should continue making loan payments as usual. Silicon Valley Bank was closed by the California Department of Financial Protection on Friday, a move which sent a rippled across the globe, and the FDIC was appointed receiver. Over the weekend, US authorities took extraordinary measures to shore up confidence in the financial system after the collapse of Silicon Valley Bank, including a new backstop for banks that Federal Reserve officials said was a big enough to protect the entire nation's deposits. The Fed also announced a new bank term funding program that offers 1 year loans to banks under easier terms than it typically provides. The central bank relaxed the terms for lending through its discount window, its main direct lending facility. These are all good news as far as financial field is concerned. Some more point, what is helping Indian banks avoid the Silicon Valley Bank heat? HSBC acquires Silicon Valley Bank UK for £1. £1? Why £1? Is it that very easy? Yeah. Then another bank collapses amid US banking turmoil. Oh, that is what they said, Signature Bank. Yeah, Signature Bank. And then, yeah, it's a news for us. China could control 1/3 of this rare earth metal, 10 equity MFs with the lowest 1 year loss rate. Anyhow, these are all important news. I request candidates appearing for interview in South Indian Bank and Bank of Maharashtra to go through yesterday, today newspaper, either Economic Times or Business Standard or Indian Express, and get themselves familiarized with all the information. This will